This is the Captain Gal FX, the Captain Gal again. Today is another video we're going to do concerning the risk management, and we are going to do risk management part 2 because we had already done a risk management part 1. Now today, basically, it is a risk management. Let us write risk management part 2. Today we are going to do part 2 of the risk management, and it is going to be a very short video. And I told you very well that risk management is what will basically make you a good trader or a better trader on the same. That is what will distinguish you from being a good trader or from being a gambler, because we had already said that anybody who is trying to risk more than 3% of his account, that is a gambler in the market, and that guy is that is somebody who should be considered as a gambler. Now somebody also and we had already said very well that risk management is what will always make you a better trader. You work on your risk management, you work on your strategies, you're good to go. And I always tell you that forex is the hardest way to make easy money. Hardest way, it means that you're fighting the risk management techniques, which means you have to obey the risk management techniques. You are fighting a lot of things. You are fighting trading with emotions, which will be coming. I will tell you on how to handle that each and every time on the coming videos, so that you can be able to know, or you'll be able to do you'll be able to manage yourselves. Now, today on the risk management, I want to show you on how to risk up to 3% of your account, and break even. It means that we are going to learn on how you can raise up to 3% of your account, alafu, and then you break even. Break even in the market is just coming from losses and going into profits. That is basically something you don't know, guys, because a lot of people, they always celebrate what is not yours in the market. What is not yours, which means that you get somebody celebrating a 50 USD, 100 USD in profit, celebrating. Some minutes later, the guy is crying or what, because you are ever celebrating what is not yours. That is why we always do what we call modification of a sell for you to break even, which means you are locking your profits, that when the market tries to reverse against you, you're no longer going to lose anything. Now, previously I told you that for a good account, you have to create a standard lot account. For if you are somebody who wanna venture into forex, then you create an MT5 account. MT5 account. Why MT5 account? Because I already told you that you need to MT5 is an improved version of MT4, because it has got a very improved things like bulk operations. Bulk operations will help you during news, because you can be able to close half of your position. You can able to close positions in profits or losses, and you can also close positions at once. That will basically, it will help you a lot of it during news time, and there is some future which will spur a lot of which will give you ease when you're venturing, on when you are doing serious trading in the market. Another thing, I told you to use standard leverage, because some people will just come there. I don't know which type of mentors you have, because I had told you that just use a standard leverage. A standard leverage of 1:500 is good, or 1:400 is good, because I told you that using a leverage past 1:500, using a leverage of past 1:500, that is like gambling in the market. That is the part of gambling, because you will be exposing a lot of risk into market, or you will be exposing a lot of your capital into the market. We don't want a lot of exposure of your capital into the market. That is why we are trying to at least minimize the exposure into the market as you maximize the profit. Now always use standard leverage. Standard leverage is basically 1:500 or 1:400 if you're using Kenyan brokers. 1:400, and I already told you that always get a good broker, because a good broker will with good spread. Get a broker which has got good spread. Spread is very important. Don't ignore that, because spread will lead you to high spread will lead you to wastage of pips. Kindly get a good broker. A good broker is a broker which can even offer you up to zero spread, because that is a broker which can be able to offer you even up to zero spread. Like, it is just, there are brokers who will even offer you up to zero spread in some assets. Now getting a broker with a high spread will lead you into wastage of pips, because there are a lot of pips, because for you to break even with that broker you shall have wasted a lot of pips. That is why I've told you standard leverage is good. Look for a good broker, and one of the best brokers in the world, one of the best, I've not said they're the best, but one of the best brokers in the world. You can be able to use your broker also. It depends on how you understand the broker and how you trust the broker. Exam is one of the best brokers in the world, because it is a global company, and I always pin the link down below. Now if you haven't created any account with the forex, you can always check the link below so that you can create account with the same. Now, how do you risk up to 3% of the account? That is the biggest question today. How do you risk up to 3%? Because I told you that when you use a standard leverage account, for you to risk up to 0.03% of that account, 3% is like using a 0.03 lot in that given account. Now there are instances on how you use this, because this is where very many people make biggest forex mistake, because you are going out there watching people with the stories on somebody telling you how I flipped $1 into $1,000,000, how I flipped 10 USD into 1,000. Those are nonsense, and those are things that they are just destined to you, or they are just dedicated to you for you to watch on the same, so that you can fall for those crap. There's nothing like that. Focus on the good risk management and you will be good to go. Now, how do you enter risk management? We have two, because I'm a price action trader. I have 3 entry points in the market. The first entry is the break of the BOS, a confirmed BOS. The second entry is the break of the change of character. If there is a change of a character, if there are break of order block, and also chart pattern, when there is a break of a chart pattern. Now these entry points always, basically, we always look for retracements on the same, because when a BOS is confirmed, we always expect retracements. When there is a change of a character, we always expect a retracement, and also when there is an order block, a break of an order block, we always also expect retracement on the same. And when there is a chart pattern, if there is a chart pattern broken, we can always get a retracement for the retest of that given chart pattern. Now, how do you use 3%? How do you risk 3%? I said very well that when you get a market has broken a BOS, there is a confirmed BOS, which means that is an entry point into the market. Now, what do you do? Remember, it is not a must that the market will have to retrace. The market can decide to retrace, or the market might not retrace. But how do you trade this given market? This is how you trade this given market. Now, when you find that there is a confirmed BOS, the market has broken the structure. There is a confirmed BOS, but the market has not retraced. Now, what do you do on this scenario, or what do you do on this scenario? Now, this is what you do. You will enter with a lot of 0.01. We'll enter with a lot of 0.01 before the end of retracement. After the end of retracement, how do you confirm the end of retracement? I said that when the market broke a BOS on a buy, which means that market should be buying. Sindio? Now, how are you going to confirm end of retracement? You're going to confirm end of retracement by this market printing a bullish candle, because there was a confirmed BOS. There was a confirmed BOS at a bullish momentum. Now, how are you going to confirm that this market has shown end of retracement? By printing another bullish engulfing candle, which means that a candle must be engulfing more than the previous candle. Now, you after the end of retracement, you enter another lot of 0.01. Now, after the end of retracement, remember you had entered 0.01 at the BOS break. End of retracement 0.01. At the break even, when these two entries have already break even, which means both of them are into blues, which means you will add another entry of 0.01 on the same, which means now you will be having three entries on the same, 0.0, 0.01, 0.01. When these markets will go into your profits with at least 50 pips, go and modify a sell. Modifying a sell is removing a sell from where you placed it for these two entries up to at least 10 pips below the current market price, because remember you are in 50 pips profit now, which means you're going to modify a sell. You're going to move your SL from where you placed it by 10 pips below the current market price. After doing that, which means you shall have locked these profits, which means there is no profits which is going, even if the market tries to reverse us against you, you shall have locked these profits. Now there is another scenario whereby you have seen a BOS, there is a confirmed BOS on the same, but this market has already retraced back, which means there's a confirmed BOS. You will get there's a confirmed BOS. Yes, there's a confirmed BOS and there's an end of retracement. When you have gotten a confirmed BOS and an end of retracement, now what you do in this scenario is that you will enter with a lot of 0.03, all of it without wasting any time, because that market has already confirmed to you that there's a break of structure, and there's an end of retracement, which means that market is now fully ready to move into that given direction. Now what you need to do is to enter with a lot of 0.03 for you to grab all those markets, because this market is no longer going to retrace, but after entering a lot of 0.03, when the market has gone into 50 pips into your direction, 50 pips, kindly go and modify a sell. Don't celebrate what is never yours in the market, because this is the mistake we always do in the market, and the market will always punish you for the same. I don't know why, I don't know what you need to do on the same, but always make sure, don't celebrate on something you haven't grabbed in the market. Don't celebrate something which is not yours. So, sorry guys. Yes. Now the same thing on the change of character. When you have a change of a character on the same, when the market has not retraced, I've told you, you enter loss size at 0.01 on the three layering. The first, when the market has not retraced. The second, end of retracement. The third, after all those markets shall have break even. When you find that there is a change of a character, end of retracement, you do the same. Enter a 0.033 lot. Enter 0.03 lot. That is how to govern all those profits without wasting any time. The same as the order blocks, the same as the chart pattern. That is how to trade a market with a good risk management. With this, if you apply this, you're not going to lose anything in the market. You are going to make sure that this market you are going to make sure that this market you grab a lot of profits in that given market. Another thing I'd talk about is the trading plan. Trading plan is very important, and this is why trading plan will make you to be a good trader, because most traders they don't even follow trading plan. They will always come there and try to trade anything, because when you have a trading plan whereby your plan says that you should be making 200 USD per week, or 200 USD per trade, depending on the capital you have. Now, some people will even go ahead, makes huge loss of money. They will just continue trading. Have a plan. A plan is what will always make you to be disciplined in the market, because without having a trading plan, how are you going to be disciplined in the market? The market is not made for you. The market can reverse anytime, any day, and there is a lot of eventualities in the market, because you can even find that there is institutional traders which are invaded in the market, and they have really changed the direction of those given market. Now, for you to be safe in that market, you have to do what we call proper risk management. By proper risk management, you have to follow those risk management techniques. Have a trading plan. If the pipeline says that you should only grab about 200 USD in the market, grab that 200 USD in the market and get out of that market. Plan for ahead and have pairs. At least I had already said that don't trade anything in the market, because if you're trading anything in the market, because it is like you're trading things that you don't even know the history. Don't trade everything in the market. Have your pairs, have your tradable pairs. If you have three, have at least three pairs. For a beginner, have at least three pairs, maximum 5 pairs. Now, if these of your pairs, make sure you analyze them on Sunday. After doing analysis of them on Sunday, make sure that you know the history of this given market. If you are a price action trader, know that you have a good history of this given market. Out of these pairs which you know the history and you have already analyzed them on weekend, don't ever try don't ever try to trade anything out of this, because if you're going to trade anything out of this, you're going to trade something you don't know the history. It is like somebody enjoying it is like somebody enjoying the food which you never participated in looking for or in making. It is very hard because you don't know where this food came from. Hautakuwa unakula na a lot of confidence which you could have used when you are the person who looked for that food. That is the same in forex. Try as much hard to have specialization in forex. Have a trading plan. Have a good risk management. Have a MT5 account. Leverage. Don't go beyond 1:500. And you'll be good to go in trading. And have a strategy. Get a good mentor. Let nobody teach you that you can learn forex alone. That is a fallacy. One day you will be in for a rude shock, because some people are telling you that, oh, the biggest scam is having a mentor in forex. That is a lie. And one day you will. Why do you need to lose a lot of money in the market, like losing about 1,000 USD, 5,000 USD in the market, in the name of learning forex for yourself? Go and get a mentor, pay him some money, save the rest for your capital. Get a mentor, good mentor, take you through the market, uh, help you learn the market, and you will be becoming a good trader at the end of it. Thank you guys, and that one was my time. If you want to join my training group, for the VIP signal, I charge 2,000 shillings. That is 20 USD. If you are outside Kenya, you can WhatsApp me on the number I'm going to pin below. Also, if you want to create account with the best broker in the world, that is Exam. I'm going to pin the link below. Go and create an account with that link. DM me the screenshot after depositing a minimum of 50 USD. I add you to my free VIP signal group for free, so that we can focus ahead on maximizing our profits. Another thing, if you want my training, I charge online, I charge 100 USD. A physical, I charge about 150 USD. Now you can DM me on the WhatsApp number so that you can connect with me for good mentorship, reliable mentorship, and affordable mentorship. Thank you guys, and let us meet the next time. Bye bye.